calling out to the wolf pack. This is Call of the Wild with Danielle Lewis, coming at you from rain-soaked, wind-swept, 48-degree at 12:30 in the afternoon, South Florida. It has not stopped raining since sundown on Monday, and it will not stop raining until sundown today. The temperature was a comfortable 64 degrees all night long and has only dropped exponentially every hour since sunup. So here we go. The coldest snap so far this winter for South Florida, and I'm just ready for it to stop raining. I really don't care how cold it gets. So today's video is entitled Understanding Taxes. I know, joy, rapture, we're going to do this again. I hope you all are all sobered up. Happy New Year. If you are not too sober and not feel like listening to this, go ahead, pause the video right now. Go grab yourself something to smoke on, go grab yourself something to drink, because you're going to enjoy the irony of the beginning. But then we're going to be talking about taxes. It gets kind of boring. So you might want to go ahead, pause the video, go get in the right frame of mind for this, and then come back and we'll start it up again. So, understanding taxes. You guys know I have done already 2 videos on taxes. The first about multi-billion-dollar CEOs promising, quote-unquote, to invest their tax windfall. Under that video, I got a comment from a Genteka in which I found his comments and reasoning so absurd that I did another video on taxes in which I sought to debunk his claims. I thought I did a decent job of it, but I also didn't like the way I ended it, because I don't want to just debunk. I want to educate. So, 3 days after I made that video, it's the middle of the night, I'm sleeping, just before I'm getting up at night, and my phone starts ringing, and I see it's my sister. So she knows not to call me when she knows I'm sleeping, so I think it's an emergency. I'm fumbling for the phone, and then I drop my phone. The plexiglass screen hits the hard corner of my desk and shatters the plexiglass screen. Perfect. So I'm trying to get a hold of my sister because I think there's an emergency, and she's not answering the phone. So I also see I have a voicemail, and it's 1.5 minutes long. I'm like, oh great, what could possibly be happening? So I open the voicemail, and lo and behold, it's not my sister. It's her roommate, our best friend. I'm Genteka, call me. Because trying to talk to you in the YouTube comment section, and you not knowing who I am, I might as well be sticking my dick in a hornet's nest. So call me. So I finally get a hold of him, and we talk for about an hour. Now, his points are still not making any sense to me. There are giant holes in his logic that I cannot reconcile. So I start doing some research, and I go online. And I remember that I have a friend at my warehouse who is also an active CPA. So I go right up to him, and I said, I need to pick your brain. He says, it's going to be $25 an hour. I told him, if I ever start making money on YouTube, it's yours. So I pick his brain for about another hour, and after that, I still don't understand how the taxes that we pay for FICA and MedFICA relate to the tax bracket. So I went on and did more research. So I have been researching for the last week, and I think I have it all together. So buckle up, smoke 'em if you got 'em. Let's get into this. And with irony befitting a poet, we start this section at the 420 mark. This is called Understanding Taxes, dedicated to my bro, Genteka. Gen meaning reality, Teka meaning technology. And since in Asian culture the family name is first, we have to reverse that. So technology is reality. My bro. So we are going to start with common misconceptions about taxes. And we're going to start where he started in the very beginning. Quote, employers pay half of their employees' taxes, meaning a tax cut for the company is a tax cut for the employees. This is 100% False. Employers are required to pay half of FICA and MedFICA, and it is considered an expense for the company. Now, expense is underlined for a reason. I need you to remember that, an expense for the company. But both the company and the employee pay that percentage based on the employee's salary. So the company is not paying that 7.65% of their profits. They're paying that 76.5% based on the employee's salary, and so is the employee. That is not all an employee's taxes. Half of that is an employer's responsibility. So no, the employee would not pay that as long as they are working for someone. Now, this changes when you become a self-employed person and you're on 1099. Then you have to pay the full 15.3% for FICA and MedFICA, not to mention other business taxes because you are considered a business. So we're going to start here with the difference between the payroll tax and the income tax, because this is very important. This is an article in paycheckcity.com, I'll put the link below, by a Mr. Luke Nesbitt, written on November 22nd, 2017. It starts, the difference between income and payroll tax is an often misunderstood topic. From a quick glance at a pay stub, one might overlook the different taxes involved in calculating the take-home pay. But not all taxes are the same. From the employer perspective, it is especially important to know the difference and the impact they can have on your business and employees. So now we're going to start with the payroll tax, which is where all of this statement has come from, where employers pay half of their employees' taxes. That is a misstatement of the facts. In general terms, it says in the article, payroll taxes are on the salaries and wages of employees. You may be wondering why you pay this tax as well as tax on your income. Well, the revenue generated from the payroll taxes goes on to support social insurance programs like Social Security and Medicare. In fact, these two programs combined account for the second largest source of revenue for the United States government. While every employee feels the burden of a payroll tax, it is important to note that he or she is not alone. Both employees and employers contribute to payroll taxes, effectively splitting the tax bill down the middle at 7.65%. Both income tax and payroll tax have a profound impact on America's businesses and employees. Payroll tax is closely associated with both employee and employer, with both parties essentially splitting the tax. However, income tax is a burden on just the employee, abiding to the tax bracket system based off an employee's gross annual income. So there's your difference here. Now there's also the income tax on the corporation. Now, the corporation pays an income tax on their profits. Now, for all of those who have never taken an accounting class, profit is revenue minus expenses, and then you have profit. Now, remember what I said, remember the word expense, and you see it there. Revenue minus expenses. So, if an employer has a business expense, any business expense, it can be deducted from their taxes, from their income taxes. They pay out and they withhold the 7.65%, but in the end, they get it written off of their taxes. Now we come back to these wild equations that I went crazy for in the second video. And that is the O times T equals CP. Now that is overall profit times the tax equals the corporate paid tax. Now, that equation actually does apply only to the income tax that the corporation has to pay. Now you see over on the other side, with the CP minus EP equals ACP, now that's the corporate paid tax minus the employer paid tax equals the adjusted corporate tax. That is called an income tax deduction, and we're going to get into more of that later with the income tax deduction. I know I went on the rant early, but we're getting there. So, the middle equation that I thought was absolutely ridiculous, that I couldn't reconcile, is the only equation in this series that actually applies to payroll tax. So we'll take the purple arrow down. You see that the employee's salary times the 15.3% divided by 2 is each paid half by the employer, half by the employee. And that is only related to the payroll tax. We're going to move on next to the income taxes. The income tax is simply a tax on employee wages or salary. While this might sound similar to a payroll tax, the main difference is who is responsible for paying the tax. Income tax is the responsibility of the employee. Income tax pertains to federal, state, and local income taxes. These taxes are based off of your location and amount of withholding allowances you claim on Form W-4. One major difference between payroll tax and income tax is income tax is not a single flat rate. It is based off the federal withholding table. The revenue generated from income tax goes to fund public services like defense, education, and transportation. Now, I find that bit in the article quite interesting because I need to actually go and look for this link, but it was reported at some point that some 80% of our income taxes go to quote-unquote defense, which is the American people directly subsidizing war. So let's go through a few misconceptions that even I had when it comes to personal income taxes. And one of them is the FICA plus MedFICA do not count towards income taxes. Those are a separate tax, and then whatever tax bracket you fall under, that you have to pay off your gross adjusted income. Now, income taxes for individuals apply to salaries, sale of stock gains, interest on bank accounts, and retirement plan distributions. You may be able to deduct work-related expenses to the extent that they exceed 2% of your gross adjusted income, which is pretty interesting because I went through, just on a cursory glance, I went through my expenses. You know, I spend almost $4,000 a year just on gasoline. Now, when it comes to businesses and their income taxes, it's very different because when you have the personal income taxes, you are on that tax bracket to which the more money you make, the more money you have to pay. But with businesses, their tax is now a flat 21%. So they are going to be paying less taxes than someone making under $94,000 a year. They're going to be paying less taxes than their secretaries. This is unacceptable. Now, this is where I'm going to lose some small business owners because they're going to misunderstand me. And that is the fact that I also find unacceptable that all three, FICA, MedFICA, and employee salaries are considered expenses for the corporation and are 100% tax deductible. What? I had no idea. Half of me knew that businesses are able to write off their expenses, but it never occurred to me that they're able to write off their employees, not only their employee salaries, but also the taxes that they pay on those salaries. Do you understand what that means? That means that the American taxpayers are 100% subsidizing corporate employee salaries and the taxes that go with them. I never quite understood, because numbers get thrown around all the time, I never quite understood how a corporation could pay zero taxes. And this is it. This is it right here, because they can write off everything. Now, on the first place, again, first, these are expenses. And what are corporations taxed on? They're taxed on their profits. So already, these expenses have been deducted from their profits, and then they are also able to deduct them off their taxes. We are fully subsidizing multi-billion-dollar corporations for their employees. I need you to understand the weight of that. For someone that is making under $15,000 a year and is still expected to pay $963 plus 15% on anything over that. And these multi-billion-dollar corporations and these pass-through corporation entities are not only not paying their 21%, they're also not paying their employees. They're not paying the taxes on their employees because they get to deduct all of that. I find that insane. Now, this is from the Tax Policy Center. It says taxable corporate profits are equal to a corporation's receipts less allowable deductions, including the cost of goods, wages, and other employee compensation expenses, interest, non-federal taxes, depreciation, and advertising. All of that, we are paying Lockheed Martin to brainwash us. The enormity of this is crushing, knowing that not only employee expenses, but any expense they could possibly incur. Now, for the small business people, I don't want you to misunderstand me, because I am self-employed and I am liable for these overwhelming taxes that smaller businesses have to pay. But when you get up to a point where you're making billions of dollars in profits and you have billions of dollars stashed overseas, why in the hell are the American people, 52% of working adults making under $30,000 a year, 63% of the country that cannot afford a $1,000 emergency, why in God's name are we allowing multi-billion-dollar corporations to do this? These rules should only apply to small businesses. These rules should not apply to multi-billion-dollar corporations that are more than capable of paying their taxes, their employee salaries, and the taxes involved with that. So I have gotten to the point here where I am completely flabbergasted that the American people can sit back and not even know everything that goes into this, much less do anything about it. Now, there's one other thing, because while you have other conservatives, unreasonable conservatives, bitching about double taxation. Now, I didn't make a slide for this, but double taxation is another animal altogether. One of the other things that my bro said to me was that look into double taxation. We are taxed on every dollar we earn, and then every dollar that we spend, we are also taxed. And and that does. I said, you know what, bro, that doesn't sound right, but I'll look into it. Now, this is from Investopedia.com on double taxation. Double taxation is a taxation principle referring to income taxes paid twice on the same source of earned income. It can occur when income is taxed at both the corporate level and the personal level. Double taxation also occurs in international trade when the same income is taxed in two different countries. So we're just going to pause there. Double taxation has absolutely nothing to do with local sales taxes. Income tax is paid through your income. Sales taxes are paid by you purchasing things. That's not the same thing. So breaking down double taxation, it says double taxation is often an unintended consequence of tax legislation. It is generally seen as a negative element of a tax system, and tax authorities attempt to avoid it whenever possible. Double taxation often occurs because corporations are considered separate legal entities from their shareholders. As such, corporations pay taxes on their annual earnings just like any individual. When corporations pay out dividends to shareholders, those dividends incur income tax liabilities for the shareholders that receive them, even though the earnings that provided the cash to pay the dividends were already taxed at the corporate level. So what we have here is people that are making money with their money, bitching that they have to pay taxes about it. It has nothing to do with the regular life of a poor person going out and buying a sandwich or a candy bar or tires for your car. Double taxation has nothing to do with any of that. I'd like to thank College Humor for not suing me for using this last slide. I thought it was a brilliant way to end this. As you guys see, I did this a little bit differently this time. I used my Xbox to create a slideshow of the pictures that I took of my whiteboard. So if you guys thought this was shitty, let me know. If you guys didn't think it was too bad, let me know. Tomorrow I am going to be doing the comments edition for the Cenk Uygur video. And let me tell you, these were absolutely hilarious. So if you could make it through this 20 minutes, I promise tomorrow is going to be worth it. Thank you for watching Call of the Wild. If you like what you saw, please like and subscribe, share the video, and I will see you all tomorrow.